As a business owner, have you ever had any of those sleepless nights where you're thinking to yourself, man, how in the world am I going to be able to make payroll? Or maybe they haven't had that experience, but you've had the oh, we have absolutely crushed it in sales this month. I can't wait to see our financials. And then you do see your financials at the end of the month and you check your bank account and you go, where the heck did all my money go? Well, in this video, we're going to be going over what is the most neglected of the three core financial statements, and that is your cash flow statement. The cash flow statement is probably one of the most important things to make sure that your business has enough oxygen getting put into its body to really be able to grow and thrive. Because let's be honest, 80+% of businesses that go out of business do so because of a lack of cash. And so if you can understand your cash flows and what's impacting them, you're going to dramatically improve your business's ability to survive, but also to thrive, because growth absolutely requires cash. My name is James Masotti. I am the owner of Our Team Accounting, and on this channel, I am passionate about helping business owners achieve their personal and professional goals through intentional financial planning. So take a deep breath, fill yourself with oxygen, and let's go ahead and dive right into today's video. So the first section that you're going to be encountering on your cash flow statement is going to be the cash flow from operations section. And at a really high level, what this represents is the cash that is going in and out of your business that directly relates to what you sell to your customers and what you pay to your suppliers. So there's a lot of just what would typically be considered expenses that show up in this particular section. Now, if you're looking at this particular section on your statement of cash flows right now, and you're like, hey, I don't see my rent and my utilities or my revenue or these refunds that I got from my suppliers on here. I thought you said this is where the operational cash flows were being represented. And it is. But here's the thing. The cash flow statement itself is actually built off of information from your income statement and your balance sheet. So until you have those two things squared away, you can't really put your statement of cash flows together and be able to read it. And so what you're experiencing when you look at that and going, James, none of these things are on my cash flow statement. I must have something wrong. What you're probably seeing is your net income line. And that net income line is being pulled directly from the net income that you had in that particular period from your income statement, right? So that is where a lot of that is coming from. And then what you're most likely going to be seeing after that is an adjustment to income. And now these adjustments to income could be a couple of different things. One of the things that is going to be captured in this for certain are the non-cash expenses that are sitting on your income statement. If you're not sure what those are, go ahead and click the video that's up in the card here or in the link below in the description so that you can go learn more about how to read your income statement and understand what those non-cash expenses are and how they impact your business's net income. But let's assume you do know what those are. And so those are going to be reflected here because they actually need to be added back into our net income because they're not actually taking any cash directly out of our business as a result of our operations. You may also see in this section some working capital adjustments. Now, whether those are grouped together or they're split out separately for accounts receivable, accounts payable, or inventory, again, those are all things, if you watched our last video, come off of your balance sheet. And so the balance sheet, right, doesn't reflect anything off of your income statement. So when there are those adjustments where, hey, money came out of my bank account to pay for this inventory, but I haven't actually sold it yet, well, we need to reflect that as having been money that came out. And so increases in inventory are actually going to be reductions in your cash flow from operations. Likewise, if you have accounts receivable or accounts payable, those are also going to reflect increases or decreases in this particular section in order to make adjustments to your net income. Now, if you only run your business on a cash basis, there's a chance that some of these things aren't going to be reflected on there. But it is important to understand that from an accrual basis, which is really where everything in your business is supposed to line up to matching the services that are rendered with when those expenses happen, you need to be able to kind of adjust to understand when that money is actually moving in and out of your business. So that's where this statement of cash flows is always going to be prepared on a cash basis, where your income statement can be prepared on either a cash basis or an accrual basis system of accounting. The last thing that you're going to be capturing under here is any adjustments that you need to make as a result of unearned income or prepaid expenses. So no different than what we talked about before. Those are things that are going to be reflected on your balance sheet if you're using an accrual system. And so you need to make the appropriate adjustments for the cash impact to your business as it relates to the net income that your business generated for that same period. The next section of your cash flow statement is going to be the impact of cash flows as a result of business investments. So the easiest thing to think about here is basically the money that you are directly spending or receiving as a result of the purchase or sale of assets in your business. Again, in our previous video about the balance sheet, we talked about the fact that when you buy things that are of a certain dollar value, you're not able to expense those on your income statement, and therefore you are not going to be reflecting them in your net income and taking that out of your operations expense. That said, when you buy those large assets, it's very likely that you had some sort of cash expenditure in order to buy those things, or when you sell them off, you're probably putting cash back into your bank account. And it's important to understand that those are not revenue and that they are not expenses. This is one of the areas that a lot of business owners get most tripped up over, because they will a lot of times reflect these things as expenses or the sale of these assets as revenue, and they can end up paying the wrong amount in taxes. And whether you've overpaid the IRS or underpaid the IRS, somebody's not happy because you want to get your money back and the IRS wants to get their money too. And so understanding that when you have these things, that not all cash going into and out of your business need to be reflected as either expenses or as revenue on your profit and loss statement. Now, what does hit your profit and loss when you have these kinds of big assets that you are buying or selling and things along those lines is oftentimes the depreciation and the amortization that comes along with those things, and those show up as expenses on your P&L or your income statement. Now, because those are non-cash transactions that also have an impact on cash flow, we've already made those adjustments in our cash flow from operations section where we've had to add those back as non-cash expenses to our net income. So it will all kind of tie out in terms of the money coming in and out when you buy and sell those, as well as offsetting the depreciation or amortization that is associated with those from your P&L. Whether you're new to business or you're looking at what I've got on screen and thinking to yourself, man, that looks nothing like my chart of accounts, but I wish it did. Well, there's good news. You're in luck because we've got a free template chart of accounts that we've put together that you can download and use as a reference for building your own chart of accounts, adding in things that are missing, subtracting out things that you don't need. But if you go ahead and scan the QR code that's on your screen or click the link in the description, you'll be able to download this free resource that we've made for you. The third and final section that we're going to be talking about when it comes to our cash flow statement is going to be the cash flow that's associated with financing activities. And these financing activities could be things like the loans that maybe you took out in order to purchase the assets that are being reflected in the investment activities of the previous section of your cash flow statement. So as we talked about, sometimes when you buy assets, you may use some cash that is going to be coming out, but it's also possible that you're going to be using loans. And so it's important that that money coming into your business from those loans, or the money going out to pay those loans, is being captured somewhere, because again, the principal payment that is associated with that is not going to be reflected on your P&L. It's going to be reflected on your balance sheet. And so we will capture that in this section of the cash flow statement. Other balance sheet related activities that we're going to capture on this part of your cash flow statement are going to be funds that come in from investors or capital that the owners have contributed, as well as any distributions and payouts that you're able to make to your investors as well. Now, one other piece of information that's a lot less common to see here in small business land. But again, if you were looking at the cash flow statement of a large publicly traded company or any corporation for that matter, would be something with regards to, basically issuing stock and the money that's coming in terms of what you're receiving from issuing new stocks. Or if you execute a stock buyback, then any money that you spend in order to buy that stock back into the corporation would also be reflected in this particular section of your cash flow statement. And that basically is going to tie out your the three main sections of your cash flow statement. At the very end, you're going to see the net impact of all cash flows on your business for a particular period of time that you're looking at. So now that you've understood how to really kind of dive in and see what is draining your business of cash and the net changes of cash on your business, you may be sitting there scratching your head thinking, I really need some help trying to pull all this apart and figuring out how I can go ahead and improve the cash flow of my business so that we have more oxygen to breathe and grow our business. And that's why I want you to click on this video right over here, where I go through the different accounting professionals that you need to put on your team that can help you make sense of doing all of this stuff properly. So go ahead and click that link, and I look forward to seeing you there.